The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi everyone, Basil Chapman on this very last day of July and last trading day of July, last candle for the monthly chart of July. Thank you to our hosts earlier on, great shows, and let's hope we can keep that standing up for the rest of the day. You've got the E-mini down 250 at 24.67. Divergences right across the board. I'll go through them this morning. In the meantime, back at the range, looking at the E-mini, the S&P holding the 9-period exponential moving average, but now that it's started to hit that 9-period moving average and hasn't closed below it, and the MACD still positive but hasn't turned down, crossed negative yet, stochastic's still very good at 87% but making lower highs, on-balance volume flailing, already coming down very sharply. A lot of things are going to happen over the next after today. The next two sessions going into my webinar on August the 2nd at 5 o'clock for subscribers, and you can sign up if you want to get my newsletter for 30 days free. I think it's going to be an important webinar in the sense that there could be a combination of the best up until last week, now starting to falter. What do they do, and can we have a rotational correction, which is something that's occurred every single time we've reached some kind of a peak of importance since the summer of 2010, and we've only had one 22% Dow pullback. All the rest have been single digit or just small double digit. We have not had a serious decline. Is it possible to have a rotational correction that allows the Dow to have a high level correction as the best sectors consolidate and the weaker sectors start to have a bounce to alleviate the left side pullback as the right side comes back up, like the scales of justice? Is that possible, or are we getting ready for a pretty serious decline? I believe that I've got a lot of the indications that are suggesting that if there is a pullback and certain levels are taken out, it could accelerate very sharply to the downside. And that's what I'll be discussing. What could hold and what could fold? Sector rotation. And we're going to be looking at the different sectors. I'll go through some of it in a moment. In the meantime, the E-mini is really on the cusp at 24.67. If it closes under 24.62 in the next 2 days, there's a good chance that you've made some kind of a top here, at least a short-term top, if perhaps not deeper. And the doji candle from last week essentially says if there is no close above 2480.50 this week, instead we close below the candle of last week, the low of 24.57 round number low, close below that, we're in for some kind of a consolidation. The 120-minute chart in the E-mini has just made a peak D. Well, the bar's not finished yet, still got 20 minutes to go. But in the meantime, it looks like it has made a peak E, and it's in that up channel, went to the top and is pulling back, now making an arch formation. So now let's get to the nitty-gritties. The Dow, INDU. The Dow is having a very nice move. It's up 68.92%. I just had a discussion with Tom and Tommy in the previous show. I joined them for a little interview. And I was saying it's very unusual to see this kind. I don't recall ever. I'm sure it happened. I just can't recall it. Where my Dow Quartet Index, something I made up, of GE going from 29. The 29s on June the 12th to the lows here of 25 in the 25s. That's a pretty 14 points. 4 points is a pretty big move for GE. My weekly chart looks terrible. Now let me move this away for the 120-minute chart. We don't need them right now. Let's move it over there. Look at that arch formation. This GE. Look at IBM. IBM, of course, came out with disappointing earnings, as it always does. Gap down, didn't even have a chance to touch the gap, just went straight down. That 144.29 was just the other day. It was back in the 157 area, 12, 13 points down. Leg C in the weekly chart, broken the left side, right side price time match, and a very sharp pullback in the monthly. Not a good sign. And Triple M, which has been one of the leaders for a couple of years now, having a pretty serious decline and an earnings failure at a peak D. The last one was a peak G, then it made a peak D. Let me put a down arrow here. So it goes to the 214s and then slides down to the 197s, trading now 201. A nice up candle, but a peak F in the weekly chart. Leg C in the monthly, which says really good chance that we should still go to a D over the coming months. That's the reason why I call this a chance for the Dow at least to have a high-level consolidation again. Some of the other indices might not have that. So, and UTX, my final one, UTX, in fact, is at 119.31, and just a few weeks ago, it was trading at all-time highs in the 124s. So this is a pretty serious peak E pullback in the Chapman wave methodology in the weekly, but still leg C in the monthly, looking out, still very positive. So, how can you have that when all of a sudden you've got, I say all of a sudden because it's just the past week that Boeing has had a stellar move. Now up 4.61%, 4.61 today at 245. Boeing in the 240s, can you believe it? It was down in the 120s just a few months ago. And this leg, this to the upside, this sharp leg is suggesting that there will be a consolidation in Boeing. But it's a high-level consolidation at this point, and that would make the 240, let's call it the 247s to the 228 area, the consolidation levels, borders that I'd be looking at over the next 2 months. And you know, that's what we've seen. You've got the IYT, which is the transportation index, taking a huge drive, drive in the dive. iShares, Dow Jones Transportation Average Index Fund, down 37 cents today at 165, and just a few weeks ago it was at 175. Serious stuff, this, and big divergences. You got the volatility index the other day, and this is the reason why I said there's a chance that we could hold up a little bit longer, because that spike in the VIX index from the 8.84 all-time low on Wednesday, was it, on the 26th, and then all of a sudden on the Thursday you get a huge move up, didn't hold, but it still went all the way to the 11.50 area, and then a pretty decent session on Friday, didn't break down, and even today he's having an inside bar. So this is saying that you got to be a little careful here, because if it was just an isolated event on Thursday and Friday when the markets pulled back intraday but didn't hold the losses too deeply, if this starts to hold, it's saying, hey, fund managers are getting ready for another move up in the VIX index. And this will make it simple. A move above 11.50 anytime this week says, uh-oh, real trouble. Now, a short-term trouble. Watch out for a market pullback, and then we'll see how it unfolds in the weekly charts. And if it holds between 10.60 where we are and goes to even test the 9-period moving average of 10.03, that would suggest that yes, there is some buying of volatility insurance, but it's not going to have an effect of creating large sales across the board in the different indices. Basil Chapman Tiger conditions are Dow's up 69, S&P's down 0.91. Other divergence. I'll be right back with these messages.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank Bank is a member FDIC and equal housing lender.
Basil Chapman will be giving a 2-series webinar Wednesday, August 22nd and Wednesday, August 16th from 5 to 6:30 p.m. Can sector rotation buoy the market into 2018? Each time the market feels it's ready to have a sharp decline, formerly weak sectors rally to hold the market up. This 2-webinar series will be free for Basil's opening call subscribers, and non-subscribers will also receive his daily newsletter for 1 month free as a trial subscription. Sign up for a 30-day free trial to Basil's daily newsletter, The Opening Call, and gain access to his subscriber-only webinar on August 2nd and Wednesday, August 16th from 5 to 6:30 p.m. Can sector rotation buoy the market into 2018?
Hi everyone, this is Basil Chapman, and I'm looking forward to seeing you at my webinar series.
To sign up for a 30-day free trial to Basil's daily newsletter and gain access to Basil's webinar, visit the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Basil takes your phone calls. Now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
So let's make it real simple. Up here in the 21,900s for the Dow. Yes, with end of the month buying, maybe even a little bit of beginning of the month buying the next 2 days. Maybe we could go a little higher, but I would say that underneath 22,000, at least for this move, because we went straight through 21,000. Let me just do this with the charts themselves. And EU. Yeah, so when we were looking at 20,000, right through 20,000, right through 21,000 in the monthly charts, I suspect that the next level of 21,900 is going to give us quite a lot of resistance, and that to break and hold above 22,000 at this particular point might be a little tough to do, especially with the divergences going on. The S&P support would mean that it would be a close underneath in the Dow. 21,720 is the 9-period moving average. You'd have to close 2 out of 3 sessions underneath there, and then we'd be looking at further declines in the weekly chart. So those are the parameters I'm looking at. The S&P, SPX, thanks. The S&P is not doing so well. It's made a peak D at 2484.04. To get to 2487 would be really positive at this particular point, but to break in the next 2 days below 2464 would suggest it's going to test the candle of Thursday, when intraday you had that sharp pullback to the 2484 level. So I'm going to be watching that very closely. At this particular point, the MACD and stochastic are good, but they have turned down. The weekly chart, MACD is really not giving us an indication of strength. It's giving an indication of an upside cap to this move. That doesn't mean to say it can't go higher, but it's saying that it will be a move that goes up and then it has to pull back quite quickly to consolidate the gains, not just a breakout. At this point, that's not what it's looking like. It's looking more like, with a stochastic at 92%, there is internal strength, but the internal strength is meeting up with a lot of resistance. That's really what I'm saying. Now let's go to the QQQ. Now this is really the benchmark. It's down 57 cents at 143.26. Apple, one of the last of the important 5, comes out with earnings tomorrow afternoon, I believe. At this particular point, that is a peak C. I don't see any other way I can count it, and that's very unusual to make an all-time high at a peak C in the daily. not a G or anything like that. It's a C. I'm going to be watching this very closely because the chart pattern itself says that if there is a move, oh my goodness, it's very close. It's at 143.35. I would have said if the QQQ holds in the 140 under 143 for more than two 120-minute bars, there's a good chance it's not only going to test the low of 143.30, but it's going to break that low. Let's watch that today. I would have expected that there'd be a bit of a rally to try to get to that leg D or double top C1, C2. So far, that's not happening. IWM. The IWM is very poor. At 141.29, down 67 cents after peak E daily. A leg F, probably a peak F in the weekly, and a leg D in the monthly. That's the reason why this webinar is going to be so important. We're going to be looking at monthly candles. My contention is, based on the Chapman wave methodology, is that when we see a price, if I can just move that over, let me just show you something here. When we see, here we go. Oh, I lost it. I'll do it again. Here we go. Okay. When we see a leg D that goes to a peak D in the Chapman wave methodology, that is where you've got to have a little bit of caution. That's not to say you can go to a sell signal immediately. Sometimes you can. But that's just where you say, hey, on the fourth highest peak, other things can happen. And we've seen that so many times, not once, not 10 times, not 1,000 times, but in the time that I've been looking at these charts, thousands and thousands of times we've seen a peak D have a far more serious pullback, D or E. And now what we're looking at is a doji candle D in the weekly chart of the Russell 2000. This is really something to be keeping in mind. The next thing I want to look at now, let's just go to gold. Gold was down a little earlier. Yep, it's now down just a little bit in leg D. Leg D is where we see other things happening, but there is a show to subscribers to my opening call over the weekend. And folks, if you do sign up for my webinar, you get my opening call free for 30 days. Not only that, Wednesday night, I do the first of the series of the webinars. We're going to be looking at the different chart formations, looking at how the closes and the open and the close of the month of July, the beginning of the month of August is panning out, what's working, what's not working, where you want to be looking at to possibly be long, where you want to just avoid it completely, at least for now. What sectors are under the radar that might actually be doing quite well? I'll look at that peak in the den. Let's look at telephone and Verizon. Look, the weekly chart of gold, I showed this over the weekend. It's had a very nice rally. It's getting close to the 1282 200 period exponential moving average. Conversely or inversely, if you look at the DXY, the dollar, which is at 93.28 at this point, about to test the low that was made on Friday. That low on Friday was within 13 cents, I think it was 13 cents, of the 93.02 low of importance that goes all the way back to the week of June 24th, 2016. The real left side, right side price time match would take you to somewhere around end of August, beginning of September to get to 91.92 in a match between the number of bars on the left to the major low that was made. I should have put that in. The week of the 6th of May of 2016. So we got 1, 2, 3, 4, 5, 6, 7, 8. Is that 8? Yep, 8, 7 or 8 bars. And this is 1, 2, 3, 4, 5, 6, 7, 8. Yeah, that takes you, that takes you to September, mid to late September, to get an exact match in time to the all-time high, not all-time high, the high of January the 6th. Of this year, the week of January the 6th, at 103.82. So that's what we were looking at. Looking at the euro-dollar currency pair, in leg F, this almost looks like the Dow. Gone to a leg F, could have been a recycle. I don't want to call it a recycle just yet, although it has all the characteristics. MACD is good, stochastic is good. I got a feeling this is going to go to a G and then come down quite sharply. But what's most important about this is that monthly chart that we've been looking at for so long went over the most important left side high. That was the high way back in August of 2015 at 1.17121, and now it's above that in leg E in the daily. Let's look at the USD JPY. And that's gone to a lower low at 110.44 way below the 200-period moving average resistance, and that's going to. And now you're into this candle. There's no real support until you go all the way down to the 109s. So got to watch this, because this is exactly the moment where the dollar has the opportunity in a left side, right side price time match in the 93s to try to reverse that and move higher. Otherwise, it starts to go down to 91. Oh, that wouldn't be good. Okay. What am I forgetting? I'm forgetting high-grade copper. High-grade copper is in leg G. I'm calling it a G for now. On the upside, and the weekly chart is leg D. Monthly chart is leg D. Very good move in copper, and that really is a big positive. And if you look at crude oil, and I had a bunch of questions, I'll try to get the questions about crude oil. Leg C, minus 31, 49.39. It really looks like it wants to touch in a leg D the high that was made. This is almost like the inverse of the dollar chart, because it goes to the May 30th high of 50.71. So we're going to be watching this closely. It's so close to the 200-period moving average in leg C. I think it's going to try to touch that level. I'll be back.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
So the USO, which is the United States Oil Fund, is down 5 cents at 10.12. This is suggesting that it could go to leg D, and that would be above 10.20. And then the moment it gets to the 10.26 area, if it gets repelled sharply and it comes back down and goes below 9.87, that'll say the 200-period exponential moving average was a repellent, not a magnet. But if it starts to hang out and it doesn't break down, it goes to 10.28, there's a real good chance it's going to touch 10.38 for the first time since it broke down back in April, about the 18th of April, in the 11s, and it plummeted all the way down to 850. 865 was the low on the 21st of June. So far, there's very good action in the crude oil. Now, with Venezuela and what's going on there, I'm not sure whether, this is one of those cases where you've got to say, okay, the president has been under siege for many reasons, some of them self-inflicted, and others just because that's politics. But at the same time, if he decides that he wants to make an example and he wants to show some leadership, if he does whatever he does in terms of the oil, if it creates a scarcity of oil, obviously oil is going to rally. I don't think that's really what he wants to do, but he might not be able politically to make other decisions. So this is something to watch very closely. I'm going to be discussing in my webinar, I'm going to go through sectors that have lagged and have just shown some strength. And that would include the oils, the integrateds. I mean, for instance, out of the blue, it looked horrible. CVX was busy testing the 102s, and then bam, it's at 109. Because ABC, it's in leg D to the upside at 109. We'll see, because this is the day that it can either, this is the 2 days, I would say, where it's either going to break out to the upside or it's going to suddenly pull back. And if it pulls back and it only pulls back to 106 and then starts a choppy sideways move, starting to make higher highs, all of a sudden it looks way better than it did just a week ago. Look at this. ExxonMobil has not had the same kind of move. So what is it with Chevron leading all of a sudden when it was looking quite weak? Although I had mentioned, I think I mentioned it was last week, we were discussing and I said, Exxon has held quite well. Chevron has gone to much deeper, lower lows. So we're going to see which one, they seem to rotate between the two of them, which one wants to lead up and down. So let's just watch this real closely. That's number one. Number two in this whole thing is gold. If I look at the GDX has made a peak C, holding quite nicely today, up 3 cents at 22.93. It isn't a spectacular move, but in a percentage terms, going from 21 to the 23s, 2 points, 10%, just about 10%. That is a pretty darn good move. The 200-period moving average has now suddenly become a magnet and a support level. So I want to watch this very closely because this is still early in the game. There are still a number of gold stocks that are looking, some led and some didn't. I was asked about RGLD, Royal Gold, trading in leg E to the upside. Looks a little extended, doesn't it? But the MACD is good and stochastic is at 91%. The weekly chart is in leg E. All of a sudden, the monthly chart is in leg C. In the monthly Royal Gold, I mean, what can you say? This is outstanding action. Up 1 cent, goes from the 74s to the 86s, as gold has really just done not all that much in terms of moves in their weekly chart. However, if you look at what's the question I had in a short, just a moment ago, oil monthly still needs leg D. Let me see oil monthly. Oil monthly. Oh, wait a minute. Is that right? Let's see. No, maybe I misread that. So this is crude oil. No, that's just holding quite nicely. Daily, yes, could go to D. I discussed that. The question is, what about platinum? Platinum right now is in leg D. Look at that. Pulling back a little bit from the high, but still up 320. Nice move. I wonder if platinum Mike is still in it. And the weekly chart has improved. That's all I can say there. We needed the daily to actually push quite a bit higher. MACD is good. Stochastic's okay at 72%. Not great. Next question I had was, where was it? Over there. Gold. It was about gold. Silver. That's what it was. Silver, look at the relationship here. Silver is strong. It's in leg C today. I'm suspecting that silver's, and I have to now put a plus sign. I now am in a buy mode with silver. Isn't that interesting? Look at the MACD, look at the stochastic. So silver's acting very well. Weekly chart isn't as good as the gold. It's so funny how they alternating between looking good and looking bad at any particular moment, the gold and the silver charts. Meantime, silver's acting, as I said last week, was acting better in the daily than gold was. The weekly chart is still lagging quite a bit. So at 16.83, up 0.14, good action on silver. I think I've done everything except the most important one, which is the TLT. Why is the most important one? Because it's down 17 cents. The TLT is the iShares 20-year Treasury Bond ETF. Look at this. 123.72, down 17 cents, but a green candle inside bar. This is 4 green candles, even though it was down 3 days ago, but they're green candles. And they're suggesting that if there is in this week, not any time next week or this week, if there's a close below 122.82, 122.82, the low of the 27th of July, that low of the 7th at 122.58 is absolutely imperative to hold. Why? Because 122.29 is the 200-period moving average support. If it takes out these two left side lows, that 200-period moving average is going to be like a magnet. MACD's okay. Stochastic's not good at all on the TLT. Now, this is going to be very important. If the Dow's now up 82 cents, the S&P has just gone positive by 56 cents. If, in fact, bonds break down, the stock market can actually rally a little bit more. If bonds start to move higher and they fill the gap, they get into the gap, and they can go to 123.75. No, I'm sorry, 123.72 is where they're at. I mean, 124.60 to 124.85, somewhere in that area. That'll be very good for the bonds, not good for yields, and it's going to suggest that the market could start to become vulnerable as money flows from the safety of bonds to the out of the equities to the safety of bonds. So we'll be watching that. And this H pattern that's being formed right now, that's going to be very informative for us on a weekly basis on Friday. I think I've covered most of those things. Question is, so a couple of things. So I spoke about my Dow Quartet. Normally, if I don't base everything on my Dow Quartet. I do say that that's showing weakness in very important stocks. But if there is, and remember I spoke about the Dow, I said the Dow is in one of its perfect modes right now. It is made up of 5 financials, and it's made up of a mix of really defensive stocks and cyclical stocks. It's got everything that you would want. Maybe there's one, maybe even too many of the financials. You didn't need MasterCard, American Express, and Visa to be in. I mean, that's nuts. But that's very important. They are there. So we'll be looking at the next question, which came along about Goldman Sachs, the XLF, etc. I'll be right back. Basil Chapman, Tiger Technicians are preparing for Wednesday's webinar, 2 webinar series on August the 2nd, August the 14th, looking at what works, what doesn't, can we hold.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date active trading information that will will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Trading is different than investing, but the opportunity to take advantage of short-term trends is only one if you get the direction right. Direction leveraged and inverse ETFs offer bold trades on U.S. and international stocks and bonds. Direction leveraged ETFs. An investor should carefully consider a fund's investment objective, risks, charges, and expenses before investing. A fund's prospectus and summary prospectus contain this and other information about Direction shares. To obtain a fund's prospectus and summary prospectus, call 866-476-7523 or visit directioninvestments.com. A fund's prospectus and summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
All right, we're back, and don't forget, we've got a lot of things. Go to the front page of TFNN. You'll see different things going on. Got a new Facebook, the questionnaire, and Facebook opportunities, a whole bunch of things going on. Let's check it out. It's really quite a set of resources we've got. Targa Resources Corporation provides natural gas, crude, and other services. And I had a question about TRGP, trading at 45.88, down 89 cents. On the daily, I've got it at a peak D, pulling back. And this is going to be very interesting because the MACD is very good, turning down, but good. Stochastic 83% good. On balance volume is pulling back, and it made a high of 47.42 on the 25th, and it's trading now at 45.88. So it's down about 2 points. Most importantly, what we're looking at is, if you look at the weekly chart, this is what I love about time frames, and I'm going to be showing patterns and time frames in my webinar. Don't forget, on Wednesday night at 5 o'clock, webinar starts. Thursday, Friday, and then all of the next week, and then going into the following week. So we have 2 weeks of my opening call. I'm going to be showing you the chart formations that we're studying. I'll go through the patterns in the morning. I'll show them and discuss it in terms of the Chapman wave techniques. And what's fascinating about this, look, the daily looks really good, right? Then the weekly doesn't look very good at all. Look at that plunge from the 200-period moving average in the 60s, maybe 61, 62, comes all the way down to 41. And now it's having a bit of a bounce, 4 points to 45.88 in the weekly for a leg D. There's no new high this week. And the monthly then says, hey, no, this is not bad. It could be making higher highs and higher lows. It could be making a stair-step move. So that's really the question. Tim wants to know, Basil, is this a good entry price for TRGP? And I'm going to say no. What I would do, because it looks like it wants to pull back just a little bit more and test the 45.06 low of the 14th, because if it takes that out, there's a real good chance that that doji candle with a 44.23 low of the 13th will be hit. The reason why I'm saying no is it could go sideways. So I think you've got a little bit of an opportunity here in time. Now, it is the natural gas and the crude oil area. So maybe I'm making a mistake by saying to you no, because maybe I should say to you what I sometimes do. Just nibble here, because it's going to give you a really good feel. But the chart looks like it's arching over, and it wants to come down a little more, and the weekly chart says, hey, I'm holding very nicely. I could pull back. It's no big deal pulling back to the 45 area, but below 45, it's a problem. So that's what it's looking like. So I'm going to suggest, if you've been following it closely and you really like the action and you're afraid, Tim, that it's going to get away from you, then at 45.92 for a 1 point stop, I think it's fine. You could start a position here, but if you really want to ask me, I would probably say, you know what, this is the area I'm going to put it in right now. This area right here, somewhere between there That's the area that I'd be looking at. And that's the safest, so I can put in a stop and feel comfortable that if it goes down, if I put it in somewhere, a position of 44.78, 44.80, or even 44.50, I would say that if it broke under 44.23, that's a much tighter stop. And if it does, there's a real good chance it's going to go deeper in the arch formation or the lowercase h formation if you're looking at the weekly. So if you're prepared to take a little bit more risk than I would like percentage-wise, you could just start a position right here. Why? Because if it makes a high-level consolidation, and this turns out to be a Chapman wave stalk leg oval pattern that's going to break above peak D, right there, above the high, double top high, 47.42, it should happen within 2 days. Within no more than 2 days, you should see a sudden spike to the upside. So that's what I'm saying to you, because you followed it. Maybe if you want to buy a little bit here, but you have to have a slightly wider stop. Hope that helps you. Now, and the next question I had was crude oil. I just did crude oil, but let me just do that again because it's in the sequence. Leg C in the crude oil itself, and it's the same thing. Look, USO is in leg C, probably more like a peak C today. So I'm saying, yeah, crude oil is in almost the same category. It's gone to the C or the D, depends how you want to look at it. Weekly charts, the same sort of thing, except in crude oil, it's leg B instead of A, instead of the pattern we saw before. So just to go to a D and then maybe pull back, I don't know. But I'm looking at it and I'm saying, I'm looking at, say, let's go to, say, Halliburton. Halliburton, I just chose that arbitrarily. See, it's just not doing much. If you look at Schlumberger, which has traditionally over the years, decades, been a bit of a leader, that's a better pattern, A, B, C, but it's already made a D, pulling back. So and the weekly chart's not great. So it could either happen very suddenly, because all of a sudden by Tuesday or Wednesday, oil just spikes $1.50. So I'm saying if you are in it, in the crude oil, just keep your stop in and just let it ride. At this point, it's making higher highs and higher lows. Nothing wrong with that. That's Schlumberger that we were looking at. Hope that helps you. Now, I had a question about, I think I've done everything that I wanted to do, at least for now, on the Dow, my Dow Quartet, etc. So that's covered a bunch of questions that I had. A question about the VIX. Didn't I do the VIX? I thought I did the VIX. Yeah, I did. So the VIX at this point is still holding pretty well, up 21 cents. Is this a fake news event VIX? Well, we're going to see very soon. Why? Because if the VIX breaks under $10, it's going to say, no, there's enough buying pressure here. The market's going to go higher. But if the VIX stays in the 1040s and actually pushes towards the 1055 or higher area by the end of the day, my thinking is that that's what's going to happen, because most of the end of the month buying has already been done at this point. I don't think anybody's hanging out for the last 2 hours of a summer day to do a major buying. I don't know. That's just the way I'm looking at it. So that's the way it is. Now, I want to do a couple of things here to talk about how I'm going to go about this webinar, how I've already pretty much structured the whole thing. Just have to fill in some of the charts, but we're going to do quite a bit live because I want to be looking at chart formations. I want to know, in the IBB, was that a peak E or a C that was made on the daily chart on the 25th? Is this, in fact, with a peak E in the weekly chart, is this saying, hey, we've had our counter trend rally, now we're going to be starting up the pullback? So that's going to be very important. Why? Because some of them, like Celgene, some of these stocks, where did it go? Where did I put? Oh, I put it in the den. I didn't mean to do that. Celgene is having made a peak F, round number high at 139, a spectacular move going from the 114s over the past couple of months up into the 139 round number high. And weekly charts strong. Monthly charts is big U-shaped pattern. Watch out for a double top failure, but still very good. I want to know, is there more room to go in certain sectors like the IBB, like the PPH? That the PPH is the market vectors, a pharmaceutical. Look, it's not a good chart in the, it's the H pattern that we're looking at in the daily. Monthly chart is looking good. Weekly chart is actually a little bit better. I want to see how this all fits in with say, a Merck, really struggling. Big spike up. It looks almost like the VIX index right here, doesn't it? So I'm going to be watching that very closely, and I want to be able to discuss. I want to look at the sectors that sometimes in counter trend moves actually show strength, and the ones that actually fail. And that's what we're going to be looking at. And we'll start. I'm almost sure that we'll be starting any to the short side coming this week, because there are some stocks that are very overbought. Basil Chapman, Tiger Predictions Hour, Dow's up 74, S&P unchanged. That kind of divergence cannot keep going for long. I don't think it can. We'll be back straight off these messages.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Learn how to trade options with Swim Lessons. Brought to you by TD Ameritrade. Think or swim. Next on TFNN.
So, yeah, the question was, in 30 years, have I ever seen the VIX in the sevens? And I'd say no. But the VXO did make a low, the VXO.X, that's the Dow VIX. It has made a low in the eights and is testing that right now. It did that on Thursday, that big spike down, went to 6, this is unbelievable, 6.32. That's really quite something. So, okay, let's go through a couple of questions here. Paul says the TLT is going to be a determinant for the direction of the market. I think there's some truth to that, but it hasn't always worked. But I'm watching that. That's kind of my thinking at this particular point. The GG is gold core. Question is from Sundip. Where would a good entry be, and what would be the price projection? The move down was maybe an aberration, or something CFO or something was resigning, something like that. So I'm looking at GG, and I'm going to make it, it's a little unusual. I'm going to say to you that I think that the plummet to the downside on Thursday was an aberration. It should have pulled back, but only to about $13.68, not to $12.80, $12.79. So Sunday, I'm going to say to you, take a little position in GG Gold Core, and I'll follow it over the next 2 days live. We'll do it on the show as to see what's happening, because the MACD and stochastic have really been improving. It was a bit too deep. Maybe it's almost at the level of 1320. It's getting close to where it should have been. But in the meantime, right here at 1320, I would say to you, because this is a more intermediate term, buy and hold only if the low of Thursday of 1279 holds. At this particular point, that's about a 50, 60 cent stop. Keep that stop in. And I'd start a position right now. My thinking is at 1340, we have to reassess. It could be very good, but that's really my thinking. XLP, Sarah wants to know, XLP is the S&P Select Consumer Staples. I'm going to be doing a lot more work with this, because for my webinar, I want to discuss what we could be looking at in this coming 3 to 6 month period. Leg D in the monthly chart, S&P Select Consumer Staples. So all I'm going to say right now is that it has to hold at 55.34. It has to hold support in the 54.30 area. If it takes that out, it's probably going to test the low that was made a few weeks ago in the 53s, and that will be very negative for the weekly chart. But on the upside, if it goes to a leg D in the 56 area by, today's Monday, a week from today, no, let's give it 2 weeks from today. That would say consumer staples could in fact be the comeback kid over the next 2 months or so. So I'm watching this really carefully to be part of my webinar. The XLF right now, XLF is trading at, XL, I must have a look at that. XLF is the S&P Select Spider Fund, trading at 25.06. It's holding the uptrend support line. It hasn't really broken down. It hasn't broken out. If the XLF goes above 25, I would say if it goes above 25.50s, then yields are going to go higher. So that puts paid to that TLT trade. Meantime, if you look at the XLF weekly chart, I think I did this live on air. The high that was made on the week of the 3rd of March at 25.30, and the high that was made at 25.32 last week had way weaker technicals, but the stochastic is still holding at 85%, and the MACD is still slightly positive. So I'm just going to say the weight of evidence is that this cup and handle formation is going to be very important, because a close any day, not the week, but any day this week, if there's a close above 25.32, I have to consider that's really good action. And any close below 24.60 this week says, real problem for the XLF, and that will go to the different stocks within the XLF. We'll look at those tomorrow. Thanks for being here, folks. Go to the front page of TFNN if you're interested in my 2-series webinar. It'll be just not only the series, but you'll get my newsletter, and every day over those 2 weeks, we'll be looking at charts, going through them very carefully, peak A, peak B, discussing it, etc. And I think that it's going to be extremely informative and hopefully very helpful to looking into the chart formations and things we want to know about for the coming 3 months to 6 months. I'll be back tomorrow. Have a great day.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
This is TFNN.